Good evening, Nick Inman from VolumeProfileTrader.com on Monday, August 6th. Just kind of want to do a little bit of, I'm going to do an update, but a kind of a tutorial, and it should help with your context of the market. I'm going back to December because that's as far back as I can go, and I'm just going to look at, I guess 3 months at a time is fine. The profiles, I'm not necessarily looking at the price action, looking at, I guess, the profiles, maybe the moving averages just for a visual, and I guess we can look at the price action too, whatever. But just look at the high volume areas and the point of controls, and look how they continue to migrate higher month after month, right? So you continue to see, value migrate higher, basically. And let's go into the next, or I should say these 3 months, and continues to migrate higher. Then all of a sudden, our first spot of something different, a month that the point of control for the current month ends below the point of control for the prior month. And, that hadn't happened before. Every point of control continued to migrate higher. This was your first sign of a potential top, as far as from a monthly standpoint. Now, maybe by this Friday, this jobs number, something changed, especially when you started to see relative weakness. But overall, let's just keep it simple. Point of control is what matters. Then all of a sudden you get a lower point of control. We basically come back to test January's point of control. Tried February's back in early May. Didn't hold. Basically tried to hold it in April too. We ended up failing against, let's call it March's point of control. Fades away from April's too. Market declines. We just find value, but what I'm still focused on are the point of controls. What's going on? All of a sudden, two straight months, the point of control ends right in, well, basically the middle of the range, but back-to-back months, same price level. Then all of a sudden, we make new highs. The following month, and where is our higher low? Our higher low is off these point of control levels. If you were buying down here, you're a winner. If you were buying down here, you're a winner. Now, all of a sudden, you get another month, a point of control that's moving higher, and a bounce off the point of control. Where are we testing? Well, first we tested April's point of control. That's what we faded against last week. And here we are against March's. And let's add to that, March was the month where we saw, our first sign of significant weakness. The pullback that we got at the beginning of March was pretty, relative to the volatility, pretty serious. We made a sharp advance, and then it got choppy, and then we fell off, got choppy, came back, tested, and then, look at the selling pressure that came in from there. You get big bars down, sideways chop, big bars down, a little bit of reversion, and you get the point. Then you get a little sideways, but a continuation of the downtrend. But all I wanted to point out was protect yourself. You can see these levels work like a charm, but protect yourself at these levels. Net long portfolios, which you still should be. The market is telling you stay net long. We have point of control still rising and telling us to remain long. The problem is volume's light right now, and it's important to realize that the market could be down 1 to 2% in a blink of an eye. Via Twitter today, I said buying the weekly 140 by 139 put spread. It was 40 cents per spread, and what it does is it protects me for a minor pullback in the market this week. I can take advantage of a little bit of time decay on the 139s, which will help, just in case if the market doesn't do it, if it didn't do it today or tomorrow, maybe Wednesday or Thursday, we get a push below 139, I can snag the position off, maybe roll it down. It depends. But I just, I want to protect myself against those point of control levels. Just to show you, gold, a similar thing, and you can see April's point of control. All right, we sell off from it, generally speaking. And May's point of control forms, and what happens in the following month? We are basically range bound between those levels. Oh, what happens the month after that? We are range bound between this point of control and this point of control. And now we finally see a little bit of relative strength. Now we're seeing a bounce, not off this point of control, but definitely a high volume area here from last month. You can see the huge high volume area here on a 90-day chart. And now we're seeing, okay, can we get above, say, 1620? Can we push up towards 1640 or so? And that's the only way you can, you got to be in it to win it. So you look at these, reversal entries. You get these U-turns, these buying bars on higher than average volume, and you go with it against these levels. And you will make a fortune off of this if you manage your risk and you let your winners, achieve their target prices, not taking them off quicker than what you need to be doing. Let's look at the VIX down at these bottom levels. Market's complacent. Every time since April, every time it has come close to, let's say, sub 16, it has definitely been a right to be a buyer of volatility. So, that may give you the case right there that you want to be a little more protected in your portfolio. You probably have tomorrow to do so, and then you see what happens. But, that 140 by 139 put spread isn't a bad idea. Maybe the 140 by 138, just realize if it does make new highs, you're going to lose out. That's going to become a losing hedge rather quickly. That's why I chose the 140 by 139. But, just pointing this out, maybe you want to buy a little more volatility versus selling it. So, let's see. And I just bring up ConocoPhillips because it's one of my bigger positions, and it's a longer-term position. I really like the idea of selling covered calls against this and like put spreads. But this is something that I am hedged against. I'm short the 55 by 57 half call spreads against my longs. The position went against me, but I'm long ConocoPhillips, so it doesn't really matter too much. But any type of reversal here pushed down to 55, that position could go into profit territory, and I can reassess, look to take the position off. But right now I'm okay that it's 90 cents above my short strike price. I do have some time till expiration, and I'm going to take advantage of that, especially with a market that's been rising on fairly light volume. All right, I guess it's appropriate to show Apple. New highs today for Apple. Let me zoom out a little bit. Okay, to be quite honest, I paused to eat and I have to remember where I was. But where I think I'm going to get on Apple, just looking back at it, is we saw our first sign of weakness on a monthly scale back here at 600 or so. Apple did end up tanking. Found support in a weird spot actually, relative to the monthly profiles, which is actually pretty strange. But nevertheless, we'll ignore that and we'll just stay focused on the high volume areas. We bounced point of control, for the month of, let's see what this is. for the month of May was good support in June, which broke out in July. We have a higher point of control. We came back to test these point of controls after earnings, and look how good of a trade that was. We came back to test this point of control. And when I'm talking about point of control, yes, I am literally talking about the point of control, but also any surrounding high volume around that point of control is a level of interest and something you want to be looking at. So, for example, here on April, you see the point of control already marked, but there's also a hefty amount of volume that goes up to 613 or so, and that's something that you want to be aware of. Just like how this 623 to 633 level has a decent amount of volume. You want to be aware of stuff like that. But anyways, you can see that we now had 2 consecutive months of the point of control at the same level. Now we see a higher low off of those levels, and now we're above July's point of control. So you just want to see that trend continue. You want to see it stay above 610. Definitely above 602, 600. If it dips below there, then you definitely want to be a little more concerned about being long Apple. But for now, we're rising, we're moving higher, and we're hitting our targets. We're going above them. That's what you want to see for relative strength. That's what will cause you to continue to hold the stock and continue to see it rise, and obviously so you can make money. But from there, I really don't have too much else to say. I just want to kind of keep giving you pointers on how you can be looking for reversals and where, and how you can, identify the trend of a market on a, 1 month profile. But you can see, even down, as far as an absolute entry, point of control for last month, we're looking for higher than average volume. We get it twice. You get your double bottom, light volume here. Wait for the confirmation. You get it here on these bars, and you see the breakout to the upside. I mean, that's a really good trade, especially because it happened in a week's time. A lot of people made a lot of money off of that, and a lot of people probably gave up some of their gains from shorting into earnings, making money and then thinking it was just going to keep going or something. But anyways, I hope that helps. I don't really have too much else to say other than protect your gains. Don't necessarily sell, but make sure you have profits locked in by hedging your portfolio. I did it with the 140 by 139. I announced it, on Twitter, which should help, and I'll continue to do so. The reason why there hasn't, I haven't announced a lot of trades is because there really hasn't been. One of the biggest trades I made was closing out my shorts last Thursday, and really taking advantage of this 40-point rally in the S&P, almost 100% net long. So now I'm hunkering down again, making sure that I'm not overexposed one way or the other, because there's the potential for a pullback, and I do want to be protected. So I hope that helps. I hope you're continuing to get better with your market context, making profitable trades, because that's what this is about. And just because I stick on the S&P and NASDAQ and Apple, well, if they're a moneymaker for you, there's no real need to get fancy with it. If you get a buy signal on the S&P, chances are, S&P, NASDAQ, whatever, chances are you can pick out a few stocks that are, at good spots and ride them higher if that's what you really want to do. But anyways, take care, have a good night, and I'll talk to you tomorrow.